Hey guys, good afternoon, everybody. It is Wednesday, March 23rd. It's 2:01 right now. I'm going to set up the room real quick and then we'll get started with our mentoring session for today. That's good. All right, a couple other things here too. And then we should be good. Cool. All right, one last thing and then we should be good to go. All right, looks like we're good. Let me get this link sent out to you guys here in the premium. Link sent out, we're good. All right, cool. All right. Hey guys, good afternoon, everybody. I'll give it a few minutes. It's 2:03 right now, so we still have a lot of time. I still have morning for you, afternoon for us over here in California. It's like probably 6 a.m. for you over there, or somewhere close to that. Let me give it some time for people to join in. There's about 6 people in the room, so I'll give it some time for people to join. It's going to take some time for people to make their way in. Melzon's asking, do you trade on profit day or are you more conservative? Are you talking to me, Melzon, or Solo? I'm not sure what you're referring to. During profit day. I mean, I've been profitable all month. I haven't lost one trade all of March. So if you're talking to me, I haven't lost a trade all month. I still trade the same. It doesn't make a difference whether it's profit or not. Melzon, the cutoff is still the same time. So, I don't really, it doesn't matter to me what day it is. It could be Monday, Tuesday, Wednesday, Thursday, Friday, profit day, Christmas, New Year's. I don't care. I still trade the same. There's like no difference between, what day. And everyone should be like that. I feel like you guys shouldn't be changing your trading habits just because it's a profit day or something like that. It's just another day for me. The thing is, it's been like it's like second nature for me now. Like I don't even change. I never change the way I trade. So it's not necessary. I don't necessarily change anything because it's a profit split day. It's if I win, I win. If I lose, I lose. You just got to go with the motions, right? I feel like a lot of people they get too like stuck on like certain things, like what you said, which is normal in those ones. It's not like that's a bad thing, but I feel like a lot of people are too focused on things that don't matter, right? There's just too much focus on trying to time the market, which I mean, if you see something good, take it. If it's risky, then obviously be a bit more conservative. But I don't think the day really matters too much. All right, looks like people are still making their way in. If you guys have any questions, feel free to drop your questions in the chat, and then we can get started with with our session for today. So yeah, any questions that anybody has, feel free to drop your questions in the chat and then I will add them to the list. We'll be going over the questions in chronological order. So whoever has the first questions, they'll get answered first. But I guess it's still a little early. People are still making their way in. There's only about 12 people in the room right now. So I'll give it some time. And then we will we'll go over it more in detail. Let's see. All right, let me see if there's anything else here that I need to check. All right. Yeah, it's lungy. I'm in a different office room right now. That's why it has a different background. I'm just trying out the different office spaces to see what works best, to see where I should be recording the new videos. There's a lot of areas here to work in and do work. So I'm gonna see what works best, and then from there we'll see where it goes from. iPad's asking, hi, which order block indicator do you use? I don't use any order block indicator. I mean, I don't even use order blocks at all. So there's a lot of different ones that you can use. I think the one that a lot of people use is by Nephew, but I don't use any myself specifically. So I would recommend you test them and see which one you like best, and then choose one from like whatever's available. Because there's a lot of different order block indicators, and they all work differently. They're not all going to give you the same order block. So if you want to use what people have used in the past and what I've sort of used, I don't use anymore. It was the one by Nephew. So if you want to check that one out, you can, but order blocks are always going to be subjective. So I think it's best to actually understand how order blocks work rather than use an indicator, because you're not going to learn anything from using an indicator, especially because that indicator repaints. So you might see an order block and then it might disappear. So yeah, if you want to use that one, you can use that one, but you're probably better off like learning how to identify yourself and then use the indicator for confirmation. All right, guys. So it is 2:09 right now. If you guys have any questions, feel free to put your questions in the chat. Just a reminder, the session's going to go on for as long as we have questions. So whatever questions you guys have, feel free to put them in the chat. Because if there's no questions and there's not going to be anything for us to cover, I just want to make sure that we, we use this time wisely and we cover as much as possible. So I don't really see any questions. I'm trying to see if anybody has anything for me to cover today. Let's see if there's anything over here. All right, let's see if there's anything else here. All right, one question from Swelly. Swelly's asking, what do you think about MFF? No challenge program where you pay to get a live account right away. That's the acceleration program, Swelly. I don't think it's very good long term, because the thing is you're getting a shitty profit split and you're basically going for a really small lot size. I mean, a small account size. So, I mean, I could try to pull it up here. Let's see. It just doesn't make sense. I mean, if you're gambling, then yeah, of course you can. It seems like a good idea, right? MFF, my FOREX. Like if you're a gambler, if you're a gambler, then yeah, it seems lucrative, but I mean, realistically, the split sucks. It's not worth it. So let me go over here real quick. I mean, people always ask that, like, what do I think about it? It's always the same answer. It's not. I mean, if you're a good trader, it wouldn't matter, right? You can do evaluation. Like if you wanted to accelerate it, let me show you real quick. So here are the accelerated. If you want an account size here, it's only 50K. You're paying 2,450 for a 50K account, and your split is really small. Your split is like, where's the split at? And the thing is, you're going to want to do the emphatic. You're not want to do the conventional. So if you do emphatic, if you're going to pay 4,900 for a 50K account, you're going to be using very small lot sizes for this. You're not going to be able to make a lot of profit from this. I mean, for example, so if you have 50K times your max drawdown is 10%, obviously. So this is how much you can make or how much you can lose. I mean, you're basically gambling at that point, right? Because you're trying to go for that to make your account registration back. And your split's not that good either. So the thing is, even if you make 5,000, let me see what the split is. I can't remember what it was. Split is 50%. So you think about it. I mean, if you're gambling on these trades here and you get 50% of that of the split, and this is to say that you're consistent for the whole period. I don't know if you get paid out right away or if you get paid out by the month, but you got to think about it. A lot of people fail their challenges within the first month or a weekly, I guess. A lot of people fail their accounts within like 1 or 2 days, especially if you're trading like this and you're expecting to be paid right away. You're probably not going to get paid right away. You're probably going to lose all that money. So me personally, I think this is not worth it because the thing is, I would rather go and do a challenge and get a way bigger account size of 200K and just do a challenge for about a month, maybe 2 months, and then get an 80-20 split, right? Because the thing is, you're going for long-term trading. If you're trying to gamble and you're trying to make money right away within a week, you might be able to do it, but odds are if you're trading that way, your mindset's probably not right because you're looking for short-term gains, not necessarily long-term. So for me personally, I don't think it's worth it. But I mean, if you want to try it, I don't know anybody that's actually done it and has actually had a good experience. Everyone I know that's done it has just failed like after the first week. So if you guys want to try it, feel free. But you can tell here the account size kind of sucks. The leverage is 1 to 100, so you're not even going to be able to take a full lot size. You'll probably have to take a very small lot size. Like you can't take what you normally would take on an evaluation where your leverage is higher. Your leverage is going to suck. So just my opinion, not worth it. But if you want to try it out, maybe you could be the example slowly if you want to try it out. Because I don't know anyone in the group who's tried it and has had a good experience. But again, the people who have tried it, they weren't not to say they're not good traders, but they're not there yet. Like a lot of people, they couldn't pass the challenge. They're like, oh, I'll do the accelerated, and they did even worse. So you just gotta be real with yourself. If you can't, if you're doing that because you want to get money right away, your mindset's probably not going to be there, and you're probably going to be gambling. So I would hold off on this. But I mean, if anybody wants to be the example, let me know if you guys do it, and then we could see how you do. Hopefully, like the payout's good and that's it. But I've never done it. Yeah, no problem, Swally. And that's a good question. I'm glad that you brought it up because a lot of people don't ask, and people ask this privately. So I'm glad to kind of go over it here on the live with you guys. Is there any other questions, guys? So let's see. Let's scroll up real quick. See if there's anything else here. Yeah, I don't see anything right now. Let's see. All right, we got a question from David. So David's asking, hey, Sean, question. Can you give me an example of a triple confluence? I'm kind of confused based on the morning session. Yeah, sure. So let me look over here real quick. Let's see if I could find one. The triple confluences don't come up very often. They come up like pretty rarely, but when they do come up, they're usually pretty good. So let me see if we could find one here. No. Okay, so perfect right here. All right, so right here we got a triple confluence. And I'll put the requirements right here. So Melzon's asking, you're considering merging your FTMO accounts? No. So definitely not. I like them split up because I can spread out my risk. So I did have a merge at one point, and then I ended up taking too much risk. So I ended up almost blowing my account one time because I was going too big lot size and my drawdown was too heavy. So I don't want to go back to 400K. So currently my thing's been reset ever since I split back to 200K. That's why I haven't been able to scale my accounts yet. Hopefully by this summer I'll be able to scale it. But when you split them up or you put them together, your timeline starts over. CT said allergies, or did you catch something in Frisco? I don't know. It's weird. Frisco was it was cold out there, so maybe I did. I don't think I caught anything. Maybe I have like a little cold, or it might just be allergies because this new office space is kind of dusty. Or I don't know. Maybe it's just me. It's enclosed, so it's just. It might just be my allergies, honestly. All right, so back to David's question. So David wanted me to go over a triple confluence, and I'll go back to your question a little later, Milzon, about the merging the accounts. But for me personally, I don't plan on merging my accounts anytime soon. I have 5 accounts now, 2 FTMO, 2 MFF, and then I have 1 TFF. So I mean, it wouldn't really matter because if I was to scale up, I could scale up on the 200K accounts. I don't have to scale up on just one. So I should be fine. I think. I don't know. I could be wrong. So hopefully I can scale up. I haven't really tried it, but I mean, if you guys have seen my profits for the oh, I don't have it on here. I have it on the Telegram. Let me see. So I mean, I showed you guys what my. And sorry, I'm going off track again. I'll get back. I'm going to go over this question, and I'll show you guys like what my profits are on my copier. Okay, so I'll just do this real quick to show you. So this is what it is for the month so far. So I mean, it doesn't really matter if I scale up or not. Like the extra 10% payout is not going to make it make or break my accounts, right? I'd rather have them split up where I have estimated like balance risk. And look at all my accounts right here. This is for the month, it's for the week, for the day. I mean, the 10% is not going to make me like, oh, I have to merge my accounts. So this will kind of give you an insight as to like, if you have multiple accounts, profits will add up. And you guys can see that this probably adds up to a pretty big number for the month. I haven't lost a trade all March. So it's been good. Anyways, back to the question over here. So David's question was if I can go over an example of a triple confluence. So this is a triple confluence right here. Basically, the first requirement is to confirm a K2 momentum signal. So looking at the K2 momentum signal right here, off this current candle, this is going to be the first requirement. Sorry guys, I didn't bring any napkins. I want to blow my nose, but I don't think I brought anything. 1 second, guys. Sorry. Let me see if I brought napkins in here. Hand sanitizer. You guys have to use some over here. Said 60K minutes. Wow. Now you see why I'm trying to get that RA, Aaron. I'm gonna go check out the car that's in Irvine, so I might go check it out this week. It's hard to make napkins. It's okay. Hand sandy. Yeah, no, you can come with me, Aaron. Check it out. Maybe this hand sandy will help me with a runny nose over here. Anyways, back to the question. Sorry, David, I keep going off track. Let's just focus on the question here. All right, first question is for this, the triple confluence. The first requirement here is going to be the K2 momentum signal. So with this red signal right here, this is going to be the first requirement. The second requirement is to confirm the signal matches the trend meter. So looking at the trend meter below here, you can see that it's a red momentum signal. with red trend meter, right? With that said, the first two requirements are met. The third requirement is to confirm price is above or below the pivots. Let me turn on the pivots real quick. You can see that price is below the pivots, right? So that's gonna be requirement 3. So after that, you just want to confirm that price is breaking, closing past the K2 high low. K2 high low is right here. You want to confirm 5 candles, 1, 2, 3, 4, 5, 6. So with that said, this is going to confirm this as low. With that said, you can enter on the open of the following candle, which would be right here for a short. You're going to go for 100 pips. And from that point right there, you let it run and full TP. So, David, does that make sense? If you need help with it, I can go over another example. Just let me know. But I mean, it's pretty self-explanatory. Yeah, no problem, David. I know it's kind of hard to spot because, well, so if you're looking for the strategy right here, David, the main thing you're looking for is going to be the momentum signal, right? Because if you don't have a momentum signal, there's not going to be an entry. But if you look for this right here, you can basically just check off a few things. So once you're able to identify the momentum signal, you just look down. Is the trend meter also red? Red and red, great. That's requirements 1 and 2. Third requirement, you want to make sure price is below the pivots. This should be a no-brainer. So like if you have all of this stuff open right here, you look at the momentum. Red, red, below. Try to extend it. I usually don't try to extend it more. So I've tried to, I have looked at it where like I can go for a bigger TP, but for the most part, it doesn't always go far enough. Sometimes it does, sometimes it doesn't, but that trade like barely comes up. And the thing is, when the trade does come up, the 10 pips is like, or 100 pips is like perfect. So I can go like full lot size on that. I'll make a couple $1,000 off it, and then I'm good. I'd rather go higher lot size, smaller target, rather than smaller lot size, bigger target, and then risk getting stopped out or risk not catching the entire move. So for me personally, I kind of like it as is, but I mean, maybe it could work, you know, it just really depends. So yeah, I mean, other than that, I don't think there's anything else here. Let me see if there's any other questions. Back to Amilzon. So Amilzon said again, you know, are you considering merging your account? So I was just discussing that earlier. I don't plan on it because I already have my account split and I'm okay with the 80-20 split right now, right? I don't really need the, I don't really need the accounts to be merged because yeah, it's going to be a 10% increase maybe in my profits, but I prefer to have them split up because it just allows me to allocate my risk better because I could have risk split up, you know, across the board. So these are my 2 FTMOs. These are my 2 MFFs. And then this one down here is my new T. There's no rush. All right, so Aaron wants me to go over V1, V2, and V3. So let's do that right now. So let's see if I can find a V1 here. See if I can find one. Probably not towards the end because market was closing right there and it was kind of slow. Let me see if there's anything around here. Oh, am I freezing, guys? Sorry guys, it might be the internet connection in this office space. So that's good to know, so that I know not to not to do the mentoring sessions in here anymore. I think it might be, yeah, no, we do have fiber in here. It's Google Fiber throughout the entire building. It's actually really, it's like 5 gigs, but I don't know why here it's kind of sketchy. I think it might be because the room is like really insulated. It's just like one like small office space, and everything's super insulated. I think the Google Fiber, or next time I'll bring an Ethernet cable. Let me see if there's one on this MacBook. Actually, we don't even have an Ethernet cable on this MacBook. Yeah, there's no Ethernet cable on my MacBook, so I couldn't even connect to the Ethernet if I wanted to, which is weird. Oh, 1 second. Yeah, this is weird because I would expect it to have an Ethernet port, but it doesn't. This is a brand new MacBook too. This is like the one that just came out. So, well, unfortunately, no Ethernet here for the MacBook. Or maybe I can buy an adapter. I don't know. I'll just keep that in mind. So if there continues to be an issue, guys, just let me know. I just want to make sure so that for the next time that I'm in the office space, I'll make sure to go to the big office space where I was last time, upstairs, not downstairs. Yeah, no, for sure. CT said mentoring is fine. Just don't do live trading there. Yeah, no, definitely. Other strategies over here. So Aaron wants me to go over the version 1, version 2, and version 3 variation. Let me see if I can find one over here. Gotcha, Talanji. Yeah, Talanji said it's not really bad, just every now and often. Gotcha. Yeah, I'll probably go outside if it gets worse, but I think it should be fine for now. Back to the examples over here. Let me see if I can find a V1 or a V2. So I'll show you a V3 first. Aaron, I'm just going to go like as I see them. So I see one, actually, no, I don't. It's too small. I probably got to go to the beginning of the session. I'm just going to go backwards and I'm going to see what I see here. And if I see anything, just turn off the pivots because they're not necessary. All right, this is an okay example. This isn't a great example, but it's an okay example. Let me just show you right here. This is going to be an example of a V3. I'll do it from start so that you can see from scratch. All right, so this is an example of a V3. So for the V3, you want to identify the K2 high-low using the K2 high-low indicator. Using this right here, we have a low down here, and then we have a high right here. So for step 1, we identified the high and the low. For step 2, for buys, you want to look for a low with a red candle. And for sells, you want to look for a high with the green candle. So right here, we have a high with the red candle. This doesn't qualify. So this is not going to be for a sell. Right here, you're looking for a low with the red candle in order to look for a buy. So right here, we have a low with a red candle. That's going to be requirement number 2. Requirement number 3 is you want the following candle to be opposite. So we have a low here with a red candle. It's followed by a green candle. That's going to fit requirement number 3. Requirement number 4, you want to confirm that there is a pending momentum in that direction. Right here, we have a sell momentum signal. So the next momentum signal needs to be a buy signal. So with that said, requirement 4 is met. For number 5, this is going to be hard for us to confirm while we're back in time because we don't have the fundamentals and stuff. So we're just going to skip this and we're just going to say that this fits the requirements. But this is pretty much what we look for during every live session. So for retail sentiment, we check to make sure that this is, so for example, we're looking for a buy here, right? You want to make sure that this is short. So say, for example, it's like 60% short, then that's great. Next, you want to confirm the fundamentals. To do that, you'll pull up the CNBC. Right here, obviously, this is not going to be, I mean, it's accurate for now, but not accurate for the time of entry right here. You just want to confirm that it is bullish because we're looking for a buy. So in order for it to be bullish, it needs to be above 100 points and it needs to be consistently above 100 points. So with that said, we're just going to say that this was green and up like 100 points. Lastly, you just want to confirm the other buys, technicals, make sure that the trend meter is green and everything. You know, you just want to make sure that the technical sentiment and fundamentals are all bullish. They don't need to be all bullish, but you can have like 2 of them lining up and that'll be perfectly fine. So with that said, we'll say that everything here has been met. We've identified the low here. We've identified this low with the red candle. We've identified the following candle as an opposite. Fourth, you want to identify pending momentum. There's a pending buy signal to be coming after this. And then after that, you would enter this for a long position. And we'd set it, I'll just leave it at 32. Generally, we leave it at like 30, 32 is fine. You let this run and there you go, full TP. Let me see your question here. So Aaron's asking, would you take this trade if you're missing 1 or 2 confirmations? So in order to take this trade, you need every confirmation on here. For the bias, you can have like 2 of them matching, but everything else has to be there. Like you can't skip any of these steps. They literally all have to be there. You've to identify the low, you can't skip any steps. Like in order for it to be an actual entry, it's like you'd have to have all of them here. The only discrepancy here would be for the 5th requirement, confirming the bias. Like you can have retail sentiment and fundamentals lining up, or retail sentiment and technicals lining up, or fundamentals and technicals. But you need to have at least 2 in order for it to confirm. So yeah, you can't miss any of the confirmations here. Literally everything here is there for a specific reason. Higher low. So you don't need so you don't need to have a higher low or lower low. You just need to have a high or a low. So like for buys, you want to look for a low. It doesn't matter if it's a lower low or a higher low. It just needs to be any type of low here. Same with the high. It doesn't have to be a higher high or a lower high. It just needs to be a high. So there's no need for a lower low or higher high. It works off any of the lows or any of the highs. You're just looking for either one if they appear on here. Yep. So that's cool with V3. Do you want to see another example? Aaron, are you good with the V3 right now? So I could pull up another one here if you want to see. All right, for sure. So we're good with the V3 right there. Let's go over to, I'll just keep pulling back and I'll see if I can find a V2 or a V1. Okay, so there's one right here. It's perfect. It's like literally right next to it. All right, so again, right here, here is a V2. For the V2 right here, you're basically looking for pretty much the same thing. It's just a small little difference. So you want to confirm the high lows again. So we'll do that by confirming this as a low and confirming this as a high. We've identified the high and the low. It's going to be requirement number 1. For number 2, you want to confirm the high is a green candle or the low is red candle. It's the same exact requirements for the version 3. It's just, you'll see what the difference is here. So again, right here, we confirm the low is a red candle. This high right here is not a green candle, so it's not going to qualify. But this one over here will. So again, we're looking for another buy because we have a low here with the red candle and it's followed by a green candle. Next, you want to confirm the candle following the high low is a strong candle. So basically, if you're looking for a buy here, you want a green candle with no wick on the bottom. Vice versa, if you're looking for a sell, you want to have a red candle with no wick on top. So I'll show you 2 examples, Aaron, because we have one right here for a buy and we have one right here for a sell. I'm just going to show you this one real quick, and then after that, we'll go over to the next one, which is like the same example just for opposite direction. So right here we have requirement 1, the low is right there. Requirement 2, we confirm that The low is a red candle. Requirement number 3, we confirm that the following candle is a strong bullish candle. And lastly, you want to confirm that there's a pending momentum in the direction of the trade. So right here, we have a sell signal. The next signal is going to be a buy signal, right? So all the requirements are met. You enter this right here for a buy. You shoot for 100 pips. So the main difference with the version 3 and the version 2 is just that you're looking for a strong candle in that direction. That's like literally the main difference. And instead of putting your stop loss at the previous swing, you just have a fixed TP stop loss for the version 2. So with that said, you let it run. Kind of bounces around a little bit. And there you go, full TP. So there's an example of the version 2 for a buy. I'm going to go back over here and I'm going to show you an example for a sell because we have one right next to it. Right over here. So again, same situation. We identify the high here. So first requirement, confirm the high low. We have a high here, low right there. I mean, there's 2 entries right here both ways. I mean, you could have caught like so many V2s right here. There was one right here, the one I just showed you. There's another one right here too for another buy. And that would have hit full TP as well. Yep, full TP off that. Actually, no, this is not a V2, sorry. I see the wick on the bottom. But going back to this example right here, we confirm the high right there. 2, you want to confirm that the high is a green candle. High is a green candle right there. Second, you want to confirm the following candle is a strong candle in the opposite direction. So right here, we're looking for a red candle with no wick on the top side. With that said, everything's been met. You enter this for a sell. We have a pending momentum for a sell right there as well. You let this run. And there you go, full TP. So that one would have been a full TP. And then again, the other one that was over here that I just showed you, again, right here, another one opposite direction. Another full TP right there. So 2 back-to-back V2s, full TP. So does that make sense, Aaron? If you want me to show you another example, let me know and I can pull one up or I could look for one. But I think it's pretty self-explanatory. All right, cool. So you go to version 2 now for version 1. There's actually a version 1 that's right next to it where we just were. The one that I thought was a V2 is actually a version 1. So let me go there real quick. So here's a small variation to this one again. That's why they're called variations because they're pretty much the same thing. They just have one small little difference to each strategy. So we got the low here. First requirement, confirm the high low. We have a low here. We have a high right here. And what you're looking for is you're looking for a double wick rejection right after the low. So right here, you can see that there's 2 wicks bouncing off the same low. Right? So with that said, you have a double wick rejection. First requirement, confirm the high low. We have the low right here. Second requirement, you confirm that there's a double wick rejection off the high or the low. There's a double wick rejection right there. You want to confirm that there's a pending momentum in that direction. Right here, we have a sell signal. The next one is going to be a buy. So with that said, you enter a long position right here. And then same thing, 10, 30. Or 100 pips and 30 pips, you let that run and full TP off that next candle. So, I mean, it's pretty simple. I'll see if I can find another one here. I don't see any other ones here. If you want another example, Aaron, just let me know. Oh, there's one right here, actually. So that's a buy example. There's another buy example right here. Let me just show you real quick. And I'll just be real quick because you guys already understand how it works. So again, right here, identify the low. Enter that right there. So you identify the low, double wick rejection off the low. You enter another long position right there. Same setup. 1030. Let that run. Full TP again right there. So pretty much, I mean, these variations are very lucrative if you do them properly. And if you're patient, looking for these specific type of entries. I I know it's not here in the requirements that you want to confirm the bias, but confirming the bias will give you a better entry. So if you were looking for a bias in either direction, um, you'd have a better chance of winning. However, in situations like this, when you're in a choppy market, you can literally be trading both directions and you'll be perfectly fine. But it's not something that I recommend for someone that doesn't know what they're doing, because it's just there's a lot of room for greediness and mistakes if you end up taking trades without a bias. So, see anything other than that, guys? Or Aaron, is that cool for the V1? Because I showed you the V1, V2, and V3. I think those are the only ones you wanted. So I'm not sure if there's anything else you wanted me to cover. If there is, let me know, and then I'll go over that. But I think for the most part, it should be pretty clear. But if you need more examples, just let me know and I'll go over whichever one you need help with. Let's see. CT said, how do you get the high low to go back that far? I'm not sure, CT. I don't know if it's like just on mine or whenever you rewind, it'll go back further. So like say, for example, right here, it cuts off. If you rewind to that point, it'll go back to where the high lows were at that point. So I think that's where you might be a little bit confused, because there's a max number of high lows that can be on the chart at a time, because TradingView, they just don't want the data to be cluttered. So like whenever it gets to that point, you just rewind it and then it'll give you the high lows prior to that. Let's see, Aaron said, yep, I've noticed lately the spread is pretty wide. Like when I enter a trade, I'm always negative. If I'm in profit on the entry, is there a time where I shouldn't be trading? So you should probably just be trading in the morning with us, Aaron. That's the best time to trade. During New York session. I don't trade during Asia anymore at all. I just traded with you guys during the live, and that's pretty much it. So like all my profits here that I showed you guys from this morning or from this whole week, these are only trades that I've taken with you guys on the live. I haven't taken any trades outside the live with you guys. All my trades here have been documented. So if you look through it, literally, like if you add up all my profits here, you can see they're all during the live. I don't take any trades during Asia. I don't take any trades pre-market. I don't take trades anywhere outside of the live session. So all my profits here are just from the live. I take like 1 or 2 trades, maybe 3 sometimes. They all hit profit. I haven't had a loss all month. So, if you look back the entire month of March, like you can see my entire screens here are all blue. And if I was to show you, like, it's crazy because I've looked at my win rate and it's super high. So like this whole month from March, it's pretty much all wins for the most part. I know the month of March has been kind of choppy and, it's been hard for people to trade, but if you just follow the bias, you guys can do perfectly fine. Let's see. Solo is asking, so for the V1, it does have to have a wick because the V1 is a double wick rejection. For the V2 or V3, you don't need a wick rejection. It's just for the V1. Let's see. Yeah, no problem, Solo. Aaron said, and the DOM is it's always 100, 300 for the V1 and the V2. The V3, your stop loss is going to be placed at the previous swing because it's for a bigger move. So, going back to, let me find another example where it's actually bigger, like where the V3 is a bigger push, because I think that's kind of where the confusion might be for you, because the example I showed you was only, it was only 300 pips. So it's not always, yeah, I'm manually changing it for the V3. Yeah, for the V3, it's always changed. It's set to the specific stop loss. But for the other strategies, it's already fixed at 100 and 300. So depending on what strategy you're applying, the only difference is the V3. But we haven't had any V3s that have been solid for a while now because there hasn't been any big moves. Like everything has kind of been, okay, here's an example right here. No, it's not. I mean, it's a little wider, but I'll show you again right here. So let's see. So going back to the requirements here for the V3, it's close. It's like past 300 pips, but it's not, I mean, it's not super far. So for the V3 right here, you identify the low right here. You identify that the low here has a red candle. The following candle is an opposite candle, which is green. There's a pending buy signal. You confirm that, we'll just say the bias is bullish. You enter this for a long position. And for this right here, you're going to put your stop loss at the previous swing, which would be right here. You can have it right at it or somewhere below. Usually I round it down a little bit. So I have it about 350 pips. So for this, you're going for 350 pips as well. You're not going for just 100 pips. So you'll manually change it if this becomes your entry. It's not going to be set at 300, and your TP is going to be wider as well. So you go for a bigger profit here, but you have to adjust your stop or your lot size depending on how big the move is. Like for example here, if it's 350 pips, you can probably use your normal lot size. But if you're going for like 500 pips, 700 pips, you definitely want to lower your lot size to accommodate for the bigger move. So right here, if you were to take this trade, let it run. There you go, full TP. So the V3 right here is, this is an example of, you adjusting it regarding the, regarding the strategy. If it's the V1, V2, then you'll use 100, 300. If it's V3, you'll use the previous swing. Yeah, no problem, Aaron. Let's see. Let me see, question over here from, let's see. Sorry, bro, I keep forgetting your name. I know your name, but I know this is your wife's account. This is Whitney. I'll just say Whitney for now. So for Whitney said on the V3, Victor, yeah, okay, Victor, there you go. Yeah, Victor Whitney, I remember. Gotcha. Okay, so you're asking, so on the V3, you just shown, wasn't it multiple that didn't hit? Wasn't, so let me see, on the V3, you just shown, wasn't it multiple that didn't hit 6:30 your time? Sorry, Victor, I'm trying to figure out what your question is. Let me read it. On the V3 you just shown, so you're talking about this V3 right here. Wasn't it multiple that didn't hit? Are you saying like there was like multiple entries that didn't hit, or trying to figure out like what your question is? Let me see. Yeah, Vic, maybe if you could rephrase your question. I'm kind of confused about. So you're talking about this right here, right? For this drop below, and that little downtrend before your markup could have been multiple entries that didn't hit. Let me see. Well, from this morning, we had a bullish bias, I mean, a bearish bias. So we weren't really looking for buys. This is just an example for Aaron, because Aaron wanted to see a V3. We weren't using a bias here. That's the requirement that I was just talking about. So do you remember the requirement here for the V3? We can't check the bias right now because we're like so far ahead in time. So I can't check what the retail sentiment is or fundamentals. But during this period here, we weren't taking any buys because the bias was for a sell. Let me just rewind and I'll see from 6:30. Because, well, I don't think there was entries here for a buy. The thing is, we were in the breakout this morning. So the profit that we took over here, let me see. I don't think there was any buys that came up right there because we were all in sells at that point. Like this first profit was at 633. So between 633 and 640, I don't think there was any buys that we were even looking for. So we wouldn't have taken anything here. This is pre-market. 630 is right here. I'll mark up 630. But I don't remember there being any buys that were available there. I know we were looking for sells, but I didn't see any buys come up. Yeah, there's no buys here that came up, Victor. This is the buy that we were just looking at. And I think that's the one that, or I think that's the one you're referring to, right? You're probably referring to this one right here. It was just one buy, but we weren't looking for a buy right there because we were in the sell. for the breakout. So there was a buy here that came up, but we wouldn't have looked at that because this morning the bias was for a sell. The fundamentals were red, technicals were red, and the retail sentiment was at like, I think it was at like 60%, or no, it was like less, it was like 55%. So there was no indication to take a buy here at all. So realistically, even though I showed a V3 right there, I wouldn't have taken that V3 because there was no bias in that direction. It was a small little shoot to the upside. I see what you're saying right here. Okay. So there was like 1 or 2 entries right here. So there's one entry right here that I guess if you saw this as a buy, you might have taken it, but we wouldn't have taken it because it doesn't fit the requirement here. So you want to confirm retail sentiment fundamentals. That's how you would know which one to take and which one not to take. So this one right here, even if you saw it, you wouldn't have taken it because if you turn on pretty much everything's indicating a sell, right? It's below the pivots, trend meters red. You wouldn't have taken this buy. Again, right here, same situation. Price is still in a heavy downtrend. Wouldn't have taken any of these trades here. But even at this time, I mean, we wouldn't even take any of these trades because at that time we were still in we were in our sell. So even if you did see it, we were all in a sell at that time. So we took the breakout for a sell right here at 633. That's where we made, that profit. But yeah, so in order to confirm, and this is why I always recommend that you guys trade in the direction of bias, right? Some people don't, like some people will take trades in either direction, which works sometimes, but when market is actually dropping like this, I wouldn't go against a trend that's so strong. But yeah, hopefully that makes sense to everybody. Thanks for bringing that up, Victor, because I know like a lot of people don't like to trade in the direction of bias, but this is a clear example for when you would trade in the direction of bias. This one right here that I showed Aaron, I wouldn't have taken that trade. I was just using that as an example because I wanted to show him that the TP stop loss is different when you're trading the V3 versus the V1 and the V2. But you're 100% right. We wouldn't have been taking any buys at this point. Let's see. All right, cool. Definitely. Good questions there. Good questions all around, guys. I know a lot of people have similar questions, but a lot of people are scared to ask. Guys, like if you guys have a question about anything, and I only know this because it's the same people asking, questions every week. There's a lot of you guys here. So, just if you guys have questions, don't be afraid. Just ask whatever question. There's no dumb questions here during the mentoring session. I know sometimes I joke around about there being dumb questions during the live, but the live is totally different because we're looking for trades. For here, I can answer whatever questions you guys have. So don't be afraid to ask any questions that you guys have, no matter how confusing, how pointless you think it might be. I'm sure there's a lot of other people in here that have that same exact question, but people are just scared to ask. So yeah, this is all, it's all to help you guys out. So other question here from Orain. Orain said, recently I've been seeing V1s working with candle bodies at the same price point. Is this something you can look at? So let's see. V1s with, oops, take this off. So question from Rain asking, recently I've been seeing V1s working with candle bodies at the same price point. It's not something that I specifically look at, Rain. I just look at it whether it's a double wick rejection, because usually if you see a double wick rejection, they're called tweezers. That's what like a lot of people call it. And it's a reversal pattern. So the thing is, if you look at the tweezers and you tie in a momentum signal, odds are it's going to push in that direction. So like something like this right here, unless you have one to look, if you have an example to look at, we can look at it. But I mean, for the most part, it's, I just look at the wicks. I don't look at the actual bodies. I just look if there is a double wick rejection like this right here for a V1. And then I obviously would take the trade right there for like 100 pips or whatever. But the body doesn't really matter to me. What matters to me for this specific strategy is the wick. So as you can see right there, full TP. But I don't necessarily look at the body ever. 725, let's check that real quick. But you're right. If you see something that's the same body, that's another reversal pattern. I forgot what it's called. Like, let me see if I can find it, the one that you're referring to. 6 or 725. Okay, yeah, so like this right here. It's not exactly like a line, but yeah, it's a, okay, I know what this is called. This is called a, it's like an engulfing pattern. So I'm sure a lot of you guys have seen strategies regarding engulfing patterns. It works the same way. I mean, if you do something like this might give you a better confirmation, right? Because the thing is, you already have a double wick rejection. If you have the following candle engulfing the first one, this is also an engulfing pattern. So if you were to see something like this, I only know this because this used to be one of my favorite strategies when I first started trading. I used to trade all engulfing patterns. When I see engulfing patterns like this, I would take it. If you tie it with the double wick rejection, then, you know, obviously it gives you an even better, it gives you an even better confirmation there. However, this wouldn't be an entry using the V1 because there's no pending sell. But if you wanted to be risky and you wanted to like just skip one of the requirements, because initially we didn't have the pending momentum as a requirement. This was added later on. So if you want to skip that and just go in for an entry like this, I mean, you technically could. However, it's not one that I would necessarily recommend because I'm not trying to give you guys risky trades, right? I want to make sure that you guys take the trades that are more probable to hit. So if we were to take this trade here, full TP on the next candle. So hopefully that makes sense, Rain. But me personally, I don't look at that. The problem with having too many requirements, like you said, you know, if the body of the candle, if you make that a requirement, there's too many requirements, you're going to have, you know, what a lot of people call analysis paralysis, where you're just analyzing too many things, you have too many requirements, and then you end up not taking anything because you're too afraid because not all requirements are met. So if you want to use it, then you can, but you're probably going to miss out on a lot of entries if you make that like a specific requirement. I'd probably use that like as an optional requirement to increase your confidence in an entry. So yeah, hopefully that helps with your question there, Lorraine. But yeah, other than that, let me scroll up and see what else I've got over here. It's going down. Let's see, Aaron sits around 7 to 745. Market tends to reverse in terms of bias. So it doesn't necessarily reverse at that time. Aaron, the mid-market reversal happens around like 9 or 10. It's just been choppy during the let me go to the clean chart here. So it'll be easier for me to show you over here. Let me just turn this off. Turn this off as well. So I'm just going to mark up from like 7 to 745 because that's, it might seem like that's how it's been moving lately, but normally it doesn't move like that. So let me just mark up 7 to 745. So as you can see right here from 7 to 745, it doesn't even reverse actually, it just ranges. So this period right here, it didn't even really reverse. It kind of just pushed up a little bit, like not even that much, and then just went sideways. So not really much right there. The mid-market reversal tends to happen around 10. So like around right here, like 10 to 12. So like from 10, you can see price was in a downtrend. And then around like, you know, midway mark over here, it ended up coming back up. So like right here is still coming down and then it reversed to the upside right here. Not like a full on reversal, but it did, you know, do the opposite. You know, if you go back to yesterday's market over here as well. Let's see. I'm trying to find a better example because the market's been super choppy lately. So it's like, might seem like market does kind of reverse, but not really. So like, for example, right here again from 7 to 745. During that period, nothing really happens. It's just been going sideways. The mid-market reversal though happens like midday. Okay, so like from 10 o'clock up until 12, this is where the reversal happens. So as you can see, price was pushing upwards, hit 10 o'clock right here, price kind of consolidated a little bit, and then did a full on reversal right here till noon. So this is when the reversal tends to happen. I think 7 to 7:45 is usually just ranging market. That's why we get off at 8. So we usually get our moves here between like 6:30 to 8. Like if we take the breakout, we'll take the breakout here for a buy, maybe catch a V3 or V1 here, and then we call it a day at 8 because the market just tends to go sideways. And as you can see right here, it's pretty obvious. This is the main reason why I stopped trading at 8. And I always remind you guys that it's probably best to stop trading. Like for example, right here, sideways, sideways. It just becomes a riskier time to trade if like market is just ranging. You're better trading when market's actually going, directional. So let's see. All right, let's see. Aaron said, can you show me an example on the technicals why you would change from looking for buys? Oh yeah, no, definitely 100%. So let me go over here real quick. I'll go to opening price for today or opening market. 23 right here. I'm going to mark up the high lows. Actually, let me see if I can find. I'll see if I can find an example here because I don't know if we had any of those specific. If we had any of those specific points there, so let me see. I'm just going to draw the. I'm only going to draw a couple because I want to make sure that price actually. I don't think price ever really came up. It just kept dropping. So, okay. So for example, right here, when price breaks below like this, we want price to, no, it's right here. We confirm. So you want to look for there's different things that it can be. It can be a high high low opening price, use price sessions. So there's different things to look for there. Second, you want to confirm retest of three. So I mean, it's pretty simple. It's not really that difficult. It's just kind of difficult if you're looking at it from. Okay, so this is actually a perfect example right here. So we had the low right there, right? The thing is you can use pending lows. So like, for example, there was a low right here before price broke it. So there was a low right there. That's why I have the line drawn right there. Here's an example of price breaking past it. That is going to be requirement number 1. So requirement number 1, confirm break and close past either a high low, opening price, news price, or session. So right here, it broke right past the high low at this point. Second, you want to confirm confirm retest of the break and close point. So again, right here, you can see the following candle. That wick came up and retested it, but did not close above it, right? So it's a break and retest. Price broke and closed below it, retested. Third, you want to confirm the direction of bias. You want to confirm another push in that direction. So right here, the third candle, it continued to push below, right? Price didn't come back above, it just came back below. So with this said, pre-market right here, if we had a bullish bias, like say, for example, we thought price was going to go up. If we saw this example here where price came below, retested and confirmed, then at this point, we're looking for sells, right? And that's the whole reason why I took the sell here for the breakout. I wasn't going to take the breakout, but once I saw the confirmation that price was going to continue dropping, I was like, all right, price is probably going to drop. So I entered the sell there. And what do you know? Full TP. That's how we took the trade there. There's different confluences that you can use, but this is how you would confirm, a change in bias. If it was going from sell to buy, buy to sell, etc. Let me see if I can find another one here. Yeah, I can find another example. All right, maybe this would be an example right here. Who knows? Let's see. Okay, so here's an example of it failing. So right here we have the high. We confirm price broke and closed past it right here, right? So the first step right here, price broke and closed past it. The second step, we have the retest right here, right? The second candle. The third requirement, confirm direction of bias. We didn't have a bullish candle push above it. Price actually came below it. So at that point, we wouldn't have the confirmation of it shifting back to the upside, right? It just came back right below, right here. So that's how you would change it. Let me see if there's another example right here. I don't know if this one over here confirmed it. Let's see. There was no retest there. Let's see if this right here. All right, so for right here. Okay, here's another example. So it failed right there, but here's another example. We have the high right here, price broke past it. So step one, price broke and closed past the high. Second step right here, the retest, right? Price came back to retest. Next, we just need a confirmation of it pushing higher. Right? We basically need it to close above here to confirm the third step. So it didn't do that, right? Price ended up breaking below here. So this was a failed attempt. So with this said, we go to the next one because it happens again right here. All right, so we have price breaking close right here off that same low or same high. You have the retest right there, that red candle. And then we just need price to close above here. Price closes above this point, then we'll have a confirmation right there. And from there, actually, no, sorry. I'm confusing myself. I'm trying to like show you an example here, but I keep confusing myself because this has already been validated. You need to like look for one that just comes up. Let me see if I can find another one here. I don't think there was anyone that came up anytime soon. Yeah, there actually wasn't anyone that came here for a buy. If I see one, I'll show you. But if that makes sense, let me know, Aaron. If not, I can try to find another example. It was just today was a choppy day. There wasn't a lot of, it wasn't choppy. It was more so like, it was indecisive as to like shifting bias because it wasn't really a ranging market like how it normally is. So Aaron, let me know if you want to see another example. If not, let me see if I can just find one here. I just want to show you a buy because I showed you a sell already, and that was a pretty solid example. Let's see if I can find a buy here somewhere. It's no. No. This is another failed attempt. Price broke above it, retested, but didn't confirm the bias. No. Let's see. Nope. I don't think there was much of a bullish bias. Like, yeah, no, it's kind of it's like not something that you get right away because it's like something that you have to actually see. Like the pattern that just repeats itself. Basically, you're looking for a price to break and close past a high low, looking for a retest and then a confirmation. But if I see one, I will show you. I just don't think there's any that happened today because this didn't happen very often today. Aaron said, I just get caught sometimes thinking I need to switch my bias. So the only time you switch bias is when price moves into consolidation. So when price starts to move sideways, that's where you start looking for change in bias, right? If price continues to drop below, that's cool. But eventually price will go into consolidation. And then when it does go into consolidation, it's either going to reverse or it's going to continue dropping back down. So the only time you really need to look for bias to change is when price switches, it goes into consolidation. Because if you zoom out a little bit, you can see here that there's different phases in the market, right? So let's see if I can zoom out a little bit. So as you can see right here, like price will be in a downtrend. It'll go into consolidation. And then bias changes temporarily, right? And it goes back into a range. And bias changes again. So there's three different phases. You either have, price is bearish, and it's just consolidates, and bullish. So there's only three different phases you can look for. The only time you're looking to shift bias is when price starts to consolidate a range. It'll go from a downtrend, and you can see here, if you just look closely, price is ranging. And if you're looking at this from this perspective, you're looking at it from this, right? So as you can see, price kind of goes sideways. And then at this point, you're like, all right, I'm looking for the confirmation of price to confirm the break, right? And then it finally does, like right here. So yeah, just think of things in three different phases. Price can either go up, go down, or sideways. But before it shifts, it usually goes, so it'll go up, go sideways. And then from this point, this is where you're looking for the bias change. You're either looking for it to switch to continue up or if it's to swing back down. That's the only time you look for the change, when price goes sideways. You don't have to always look for it, but lately the market has been going sideways like pretty much all day. So it definitely helps when you're looking for a specific pattern. And that's why it's really important that you guys use the high-low indicator, because when you guys draw the high lows, it's easy to see when price is actually ranging. So it'll make sense. It's just more practice, more repetition, more really seeing how things play out. Because like literally, if you really want to practice, Aaron, just do this. Here's like something you could do. You can just do this, draw a bunch of high lows here. And this could be your practice. If that's your problem, identifying, bias change, just draw high lows here. And this will help you identify. So like, for example, right here, price is going sideways at this moment, right? So now that it's going sideways, what are you looking for? You're looking for a bias change, right? This price is literally just going sideways right here. So you're just looking for a change in bias, whether it's to the upside or whether to the downside. And then you can just keep drawing more high lows around here. And this is how you would identify. So again, right here, like same thing that I was just looking at earlier. Price is now going sideways. So you're looking for a bias change right here. Price goes sideways, broke below. You're looking for the retest. All right. So price broke below right here. You have the retest right here. And now you're just looking for the confirmation below. And that confirmation below, you're just going to use the next low right here. So you have a low at this point. You want price to close below this point to confirm it. So price hasn't closed below it. It's back into a range again. And then it finally closed below it right there, right? And that's where bias decides to continue dropping from that point. So hopefully that makes sense. I mean, it's kind of confusing, but the more and more you apply it, the more and more it'll make sense. It's just identifying when price is going sideways and when it's actually moving directional. Aaron said, how many points is considered ranging? There's no specific number. It's literally just looking at the chart, like how I was just looking at over here. You would just draw your high and your low. And then you're just basically seeing like how, if it keeps bouncing within this area, that's how you know it's in a range. There's no specific price point or specific points. You're just looking at, you know, how much it's moving just sideways. That's literally all you're looking for. So you can see right here, price just keeps bouncing around. This is considered a range. Let me measure this right here. And it's about like 300 pips. The range could be big or it could be small. It just, you know, really depends on because right here is pre-market, so it's not moving that fast. But if you go over to like 6 o'clock, like right here, it's kind of dead, right? We get closer to market open right here at 6. And then right here, it starts to pick up a little more. So 6 o'clock right here, you draw the high, you draw a low. So it's still in a range at this point, but it's a bit of a bigger range. So before it was only like 300 points, still 300 points, but as you move along, it starts to pick up. So right there, now it starts to push heavy to the downside. So it goes from ranging 300 points to now moving directional 700 points. So it helps having these high lows drawn up throughout the chart. Other than that, let me scroll up real quick. So I think that's it with that question right now. Let's see, Leash is asking, how come some of the strategies TP stop loss is 100 while others are 130? Wouldn't this make the 130 strategies more riskier to take? Yes and no, Leash. Like the thing is, our strategies here are they're high probability. So, you know, if you base the strategy off high probability, you can take a negative risk reward because you're not planning on losing, right? Like, I mean, you guys have seen my profits. All like basically majority of my profits from this whole month, they're all like speculative trades. Like they're like all like 130. A lot of these weren't like full one-to-ones. So it's not necessarily risky. It's risky if you take the risk and you don't use the biases. If you use biases, like for example, if you use like for every strategy here, or almost every strategy, I require that you confirm you're trading in the direction of the bias, right? So if you're trading in the direction of the bias and you're using a negative risk toward, these strategies already have a high win rate. If you trade in the direction of the bias, your win rate's even higher. So even if it has like already a 90% win rate, if you use the bias, you're almost 100% at that point because, you know, I haven't lost any trades for the month, and that's because I'm taking quality trades. So as long as you're taking quality trades, it doesn't make it any riskier. It's just that you're planning on winning that, if that makes any sense. The problem with, and I can see where you're coming from. So the problem is a lot of people who come to K2 who learn different strategies, you guys are used to using strategies that have low win rate, right? So if you have a low win rate and the risk reward is 1 to 3 or 3 to 1, then obviously it's riskier. But if you have a strategy that wins almost every time, then it's not riskier because you're weighing the pros and cons. So hopefully that makes sense, but it's a common question that we get a lot. So a lot of people don't like the negative risk reward. But the thing is the strategies work, right? And they've been working for years. So that's why we continue to use them. So I don't necessarily consider them riskier because they do have a higher win rate compared to the one-to-ones that we have. Like the snipe strategy, right? That's a 1-to-1. That strategy hits like a lot of the times, but it does lose like a good amount of times too. So that's why it's a 1-to-1. Same with the daily strategy. That strategy is a 1-to-1 because it's not, you know, that's probably at the 70 to 80% win rate. So for that one, if you take that trade long term, you'll end up in profit because it has more wins and losses. But you're not going to have like consistent wins. Like I haven't taken any of the dailies for this month. Haven't taken really any of the breakouts, which are also 1-on-1, because I find those all to be riskier than a 3-1. So, I mean, it depends on your trading style, but yeah, it doesn't necessarily make it. I wouldn't say it's riskier. It just, if you understand how to apply it, it makes it actually less riskier because you'll get in and out when you're supposed to. But other than that, let's see. Next question from David. David's asking how long, just kidding. David said, how long took you to master all these strategies? So it's an ongoing process, David. I still haven't mastered these strategies yet. Like every day is a new day, right? The thing is the market's always changing. So you have to adjust with the market. We've only been applying these strategies for like less than a year, maybe like about like fall of last year. But the thing is we were applying it from fall until December and we didn't have any losses, especially like the triple confluence. This over here, I don't think I've ever lost a triple confluence entry, like ever. I don't know if Patricia's in here, but Patricia, she actually has been using this as well. She said she's never lost using the triple confluence. So I still haven't mastered these strategies. It's still all basically new to us, but it just depends on like your ability to adapt with the market. So usually we don't have the bias requirement, but the market's different right now, right? We're in the middle of a war. We were in the middle of COVID, market's kind of crazy. So increase your probability of winning by adding requirements that will help improve your confidence with the entry. So yeah, I mean, I've only been applying these strategies for a couple of months, David. So I wouldn't say I'm anywhere near mastering the strategies. I think I've just, I'm good at analyzing the market and using these strategies to supplement my analysis. So yeah, I mean, you never master anything, guys. Like the thing with trading is it's an ongoing process. You win some, you lose some. Lately, I haven't been losing anything. So it's been good, but that doesn't mean to say that, things can change tomorrow. If the war gets worse or gets better, who knows? The market's is always changing. So other than that, let's see. Yeah, Talanji said you literally created the V3 in like 2 minutes right in front of our eyes just by looking at the chart and trying to understand what Isaac did. Shit was like art. Yeah, no, I mean, that's the thing with me, guys. Like I can make small adjustments by just looking at the chart. Like if I could see something that you can change differently, I'll make those changes. That comes with my expertise in trading, right? I've been trading for like 11 years. So for me, I can just look at the chart and I can create a strategy from thin air. Like I can just be like, okay, if this happens, and this happens, there's a strategy. It's the same with the V3. The V1, V2, those were all like created off the fly. The V3 was even more off the fly. That was like something that we were on the live and I was like, hey, this pattern looks cool. And we started applying it. And I created the strategy right then and there with you guys on the live. Like it's not something that I tested, anything that I back tested or that I even practiced. We literally saw it on the chart and I was like, okay, this looks like a good strategy. And then it became a good strategy. So, it just comes with the knowledge from experience. But other than that, let's see if there's anything else here. Dell's asking, when you first became consistently profitable as a trader, were you following a trading plan? I was following my strategies. I wouldn't say I was necessarily following a trading plan, Dell. So I've never really followed a trading plan aside from now where I just trade during the New York session. I guess that's a trading plan, right? But yeah, I mean, I guess I never had a profit goal. Like every day I was kind of I took what I saw, what was good, but I never was like, oh, I made $1,000 today, I'm done, right? I never did that. I used to trade all day. So I think now I have a trading plan. Back then I didn't really have a trading plan. I kind of just applied the different strategies all throughout the and I found whatever worked during that time period. But yeah, no, I never really had a trading plan. Now I do have a trading plan. I only traded from 6:30 to 8, and that's it. Sometimes I'll go on mentoring sessions with you guys here, but I'm not on my charts in the afternoon. I'm uh, I'm just finding other things to do really. Because the thing is, I feel like the big problem with a lot of people is they feel that they need to trade 24 hours a day, right? That's like the wrong way of thinking. You get burnt out that way. And I know from from experience, like I used to try to trade, like me and Maddie, I don't know, is Maddie here? Like me and Maddie try to wake up like at like 3 in the morning every day to trade pre-market. That like literally screwed up our trading so much because we were getting greedy and we tried to trade more. If you can take a couple good trades during New York, that's all you need. You don't have to take, 100 trades a day. Like for me, I have a trading plan now. So I just trade 6:30 to 8. I'm stress-free throughout the rest of the day. I can do whatever I want. So, yeah. Maddie said, yeah, facts, LOL. We were doing that pre-market BS. Yeah, no, exactly. Like Rami said, that's the words of financial stability. Yeah, no, exactly. I just stick to 6:30 to 8, guys, and that's my trading plan. I don't have any profit goal. I just trade 6:30 to 8. Doesn't matter if I make 1,000, doesn't matter if I make 100, doesn't matter if I make 2,000, 3,000, 4,000, whatever. The more the better, obviously, but I'm not going to force anything after 8. So that's pretty much, that is pretty much it. Let me see if there's anything else over here. See, next question is from Dell. Dell said, what about over trading? You never had the fear of that? I mean, not really. I mean, everyone has an issue with over trading, right? The real problem is you, not you specifically, but in general, it's just you being real with yourself, right? If you know over trading is your problem, then you got to solve that issue. There's no fear of it. It's like you make the mistake, you learn from the mistake, or you just keep going, right? So there's no real fear of over trading. It's really, you fucked up, right? At that point, you messed up. What are you gonna do about it? Are you gonna keep over trading, or are you gonna learn from it and stop over trading? So over trading, I mean, yeah, it's been an issue for me, but I was never scared of it because I already knew it was my problem. Like when I would lose a trade, I would get mad at myself. I'd be like, why did I lose this trade? I look back and I'm like, damn, I overtraded. So what do I do now? I don't overtrade. So that's the best way to uh, to get across it. It's really just, understanding where your weak points are and making adjustments to avoid making those mistakes again in the future. So yeah, I mean, I don't have fear of over trading. I mean, I did overtrade, but I never had fear of it because I knew it was my problem. So other than that, let's see. Melzon's asking, which method do you recommend to withdraw FTMO profits? I mean, there's no perfect way to withdraw your profits, Melzon. It's really up to like what you prefer and what falls under your preference. I do bank transfer. Before I didn't trust FTMO, so I used to do Skrill, which is like the international PayPal. But they started charging fees. So I was like, I'm just going to do the bank transfer. I don't know if they charge fees for bank transfer, but it's just easier. Because if you do Skrill, they send it to your Skrill and then you have to transfer it to your bank, which is dumb. It's like a middleman. Now that I do trust FTMO, I just get it sent straight to my bank. So I don't have to go through any middle process. I just give them my bank account number, your SWIFT number, your checking or routing number, and then they do basically a bank wire to your account. And they use this company called Wise. So if you want to do what I'm doing, I do bank transfer. If you want to do Skrill, you can do Skrill. If you want to do cryptocurrency, you can do cryptocurrency. But I mean, there's no best way to do it. Either way, they're gonna identify where your money came from, right? If you're trying to get away with taxes, I wouldn't recommend it. I know some people try to do crypto and get away with it, but the crypto space is getting so regulated now that there's like almost no way to get away with it without possibly getting screwed. So I would just do bank transfer if you want to have the quickest payout. Because my payout comes pretty quick. It's like a couple of days. Before it used to take like 14 days. Now it's like 5 days or less. Question from Rami. Rami said, what have we got to pay to get you on live all day? Right, Rami? I mean, it can be an infinite amount. I still wouldn't be trading all day because I already know where my sweet spots are. My sweet spot 6:30 to 8. Just rinse and repeat every day. But yeah, I mean, other than that, guys, I know, right? That's the problem. So I see what happens with a lot of people is you'll make a lot of profit with me on the live, and then I see a lot of people blow it all in Asia session. So to prevent that from happening in the future, you could just not trade during Asia, right? That's probably your best option, or London. I mean, depends on when you guys want to and feel like trading. But other than that, we've been on this live session for about an hour and 32 minutes. So if you guys have any other questions, feel free to put your questions in the chat. I'll stay on for as long as we need to, but yeah, I mean, I don't see any other questions here. Let me check the Telegram real quick. Yeah, Aaron, hopefully we covered like everything that you needed. I mean, if not, we'll have another mentoring session next week, or we can I can just meet with you privately. But yeah, if there's anything else that you want me to cover, just let me know. Cause I want you to kill it just like everyone else here. I mean, it's been a crazy year, guys. This is like my best year so far, I think. CML's on, so not trying to mess with the IRS, just want to know the most convenient way to transfer profit. Yeah, so what I would I wouldn't recommend it because I'm not a tax specialist, so I can't give you tax advice, but your best way to do it is to, transfer it through an LLC. If you make a decent amount, have it taxed as an S corp so that you can get the tax benefits. But I mean, there's no way around it. You're gonna have to pay taxes on it one way or another. So yeah, it's just going to be, I would just do it the right way. Last thing you want to do is make a lot of money and then you spend it all thinking you don't owe taxes. And then next year you get hit with this fat tax bill because it's not going to end well if that happens for you. Yeah, no, definitely, Aaron. Just need to practice a little more. Should be good. But yeah, guys, we've been on this session for a little over an hour and a half. I don't see any other questions here. Let me check my email. But if you guys do have more questions, always feel free to email me or message me on Telegram. Otherwise, we have this mentoring session every week. So let me see my calendar real quick. I'll see if I have my schedule for next week set up. Looks like next week we'll probably have the mentoring session on Monday, March 28th, same time, 2 p.m. Unless that doesn't work for anyone, just let me know. We'll try to work around your schedule. But I mean, other than that, I think that might be it. So if you guys have any other questions, feel free to reach out through email or Telegram. But other than that, I'll be here on Telegram for a while tonight and do some back office work. But yeah, I'll be around. So if you guys have questions, feel free to reach out. Otherwise, I will see you all tomorrow for the next mentoring session, or not mentoring session, the next live session tomorrow morning. And we'll pick back up as we near the end of the trading week. So if you guys have questions, don't hesitate to reach out to me. Otherwise, I will see you guys tomorrow.